Welcome to Mad Money. Welcome to Cramerica. Other people make friends. Hey, I'm just trying to make you a little money. My job is not to entertain. I'm educating you. I'm teaching you. I'm doing everything tonight. So call me at 1-800-743-CBC. Tweet me, Jim Cramer. All right, we got something amazing today. A non-farm payroll report that showed some accelerated job growth, but also downward revisions of the last 2 months, therefore give us a soft read, one that gives the Federal Reserve a lot more leeway for a rate cut. I know President Trump sure wants one. The market exploded higher from the get-go, and it didn't falter. That was in part because of the just right labor report, in part because the president didn't hurt his cause by tearing into our trading partners. In the end, the Dow gained 443 points, S&P climbed 1.03%, and the Nasdaq jumped 1.20%. Hey, what's on tap for next week's game plan, you probably asked. Well, I've got it right here, okay? Let's go there. First of all, the week starts off with a meeting, and we don't know what's going to happen. A meeting with the Chinese to try to hammer out some sort of trade deal, or at least start getting us talking a little more. We have no idea where the two sides are, but we know this. The Chinese have something we need, rare earth materials, essential for the auto industry. And, well, we've got something that they need, okay? Now, without these rare earth materials, what's going to happen is our auto factories are going to have to shut down soon. At the same time, the Chinese desperately want NVIDIA's better semiconductors. Can a deal be made? Is that an even trade? Secretary Bessent will be part of the talk, so I'm actually optimistic something can get done because he ain't a bomb thrower. Apple stock just had a second straight positive week. That's an unusual occurrence of late. And some of the newfound luster might be in anticipation of Monday's Worldwide Developers Conference. Now, there's a lot of ballyhoo talk about this, but remember, this is a software event, not a hardware event, so they're not going to unveil new hardware, and it's usually not a catalyst for the stock to move, but it's obvious from today's aggressive buying that some speculators think this time is different. It's been hard to own Apple of late, whether because it doesn't have a top-notch AI offering or because it's been targeted by the White House for shifting some of its Chinese manufacturing over to India. The president wants the iPhone to be built in the USA, but it's not economically feasible. It's cheaper for Apple to just pay the tariff. The contentious relationship with Trump doesn't help at all. But maybe Apple can catch a break now that Elon Musk is drawing so much fire. That's my view that it's contentious. From the outside, some might actually think it's convivial. I just don't get that feeling. Also on Tuesday, Capital One speaking at a Morgan Stanley conference, which will be the first time it's told the story of its merger with Discover Financial, which I think will be huge. And that's why we have a nice-sized position in this one for the Travel Trust, which you can follow by joining the CNBC Investing Club. I think the synergies here are fabulous. And Richard Fairbank, the CEO of Capital One, understands credit cards as well as anyone on earth. It should be a very good meeting. Maybe that's why the stock was up $6 today, in anticipation of Fairbank telling a great story. Now, James Smucker reports Tuesday before the bell. Now, I don't know if it can escape the packaged foods purgatory that everyone seems to be involved in. This group acts the way that the coal stocks did not that long ago. Wow, what a compare. Smucker makes jams and peanut butter, so far okay, right? But its most exciting offerings are the Uncrustables, which are fantastic sellers. Now, I wish I could pound the table on this stock with its nearly 4% dividend yield, but the secular decline of the packaged food sector is just too powerful. And who knows whether the Secretary of Health and Human Services will go for the Uncrustable. We've also got a very important analyst meeting on Tuesday with Deere. The storied agricultural equipment company can tell a tremendous story about farmer orders. You know what? I think it can go higher still. I saw an upgrade today. After the close, we hear from GameStop, which is now going all crypto. While that's a lot better than being just a gaming retailer in secular decline, that's not saying much. So you'll see the gaming stuff, and then you'll see the crypto stuff. And the crypto stuff is what's going to drive the stock higher, probably. Now, we got a very popular IPO this week. It's called Circle Internet Group, which is a crypto platform, and buyers went crazy for it. So crazy that it's gotten people buzzing about crypto outfits coming public that might otherwise not have bothered. And maybe that's what GameStop can tap into. Look, I'm not a buyer of this. I'm just pointing out the storyline. Wednesday morning, we should have a report about what Jensen Huang, the CEO of NVIDIA, said at the GTC conference, this time in Paris. When I spoke with Jensen not that long ago, he lamented that the federal government wouldn't allow his company to sell a huge amount of chips in China. Jensen said he has a solid relationship with the president and that the president has a plan. He made it sound like there could conceivably be a deal that would be incredibly impactful. So now we go back to this. What he's saying and what happens from this are probably the two most important things of the week. Now, also before the bell, we get the May Consumer Price Index reading. This is an important one because it could give us a good read on how hard the tariffs are hitting the consumer. We don't know yet. Jay Powell has adopted a wait-and-see approach to cutting interest rates. I think that's smart. He definitely won't act if the CPI spikes, so this is going to be a very important number. Now, two companies give us earnings of interest on Wednesday. For the bell, we hear from Chewy, the online pet food retailer, which offers a lot of accoutrements that pet owners love. It's been a real winner. By the way, this CEO called the bottom on our show. I thought it was pretty great. I think you can continue to win. After the close, it's Oracle's turn. The last quarter was poorly perceived, and the stock got hammered. Now it's bounced almost all the way back. That's an astounding 50-point move, almost in a straight line, too. Oracle's gigantic data center build-out should start paying off soon. I think that they can show some very good revenue growth this quarter. Now, Thursday brings some analyst meetings that could move the needle. Cardinal Health, we've had them on a couple times, tells a terrific story about how it's much more than a drug middleman, and I am a believer. But the one that I'm most interested in is BlackRock. That's the largest money manager in the world. Larry Fink started it. My Charitable Trust owns shares in the stock, which is down more than 3% for the year. It has not worked out for me so far, but I am patient. Maybe BlackRock can tell a good story about assets gathered, further explain the top-notch technology they have. If the meeting's positive, I bet the stock goes positive for the year. Adobe reports after the close, and it looks like the stock could break that downtrend it's been experiencing for some time. I wish the competition weren't so fierce here, but it doesn't seem to be letting up. Adobe's an amazing company. It's helped so many people and small businesses bring out their creative selves. If you can get this stock for under 20 times earnings, that's a little bit lower than from here. That's close enough to where it is now, though. I think it actually might be worth it, but it would be a flyer, okay? Finally, on Friday, we get the latest University of Michigan consumer sentiment reading. After reading through the Dollar General conference call, which I thought was very downbeat about our country, although upbeat about Dollar General, I get the sense that the consumer is feeling pretty darn gloomy. Let's see if the stock market's run has impacted that direction. The answer is probably not. So here's the bottom line. We should be headed for a quiet week, but you know what? We got to stay close to Truth Social to see what's going on in the White House before we assess anything these days. Given what happened with the president and Elon Musk this week, you need to follow all the palace intrigue, even if you don't want to. Okay, why don't we start with William in New Jersey. William.
Hello, Jim. First-time caller.
Oh, great, William. Thank you. Thank you for calling. How can I help?
I'm in a bit of a penalty box. I took your advice early this week and jumped into Lululemon ahead of the earnings. And I'm down about
I thought that Lulu would do better. I was quite surprised. It was a bad conference call. It was a bad quarter. I am aghast to think that this could be such a horrible situation. They had tariff problems. They had the wrong fashion. Everything went wrong for Calvin McDonald. And what can I say? I just don't think he's capable of being as bad as that stock was. 17 times earning. It was a bad quarter, though. And, William, I've thought a lot about this and a lot of soul searching. I am shocked at how they missed the quarter. And I wouldn't be surprised if there weren't some shakeups if that happened again. Now we're going to go to Jason in South Carolina. Jason.
Hey, Jim. Thanks for taking my call.
Of course.
All right. Question. Do you think Deere's done, or is there still more to go? Is it still a good time to buy?
No, Deere's good. Deere's good. Deere's in a great – the farmers are in great shape here. And I know that Deere looks like it should be peaking because it's had such a big run. Believe me, this stock has multi-year moves. I really still like Deere here. Let's go to Frank in New York. Frank.
Hello?
Frank, you're up. Yes, it's Jim. What's up, Frank?
Hey, Jim, thanks for taking my call.
Of course.
Thanks for your 20th anniversary, and I've been with you the whole 20 and before that, Cudlow, so I'm a Cramer lifer.
Oh, my. All right. You've got a lot of Cramer. You've got Cramer.
Okay.
How can I help?
Okay, listen. I own Uber. Everybody loves Uber. It's a free cash flow giant, okay?
Yes, it is.
This
yes,
stock
it is.
could be $100 and something, Jim.
I agree with you.
When are people... people are worried about autonomous driving. That's not going to hurt them. They're partners with people.
I agree with that, too, especially with the setback of Elon. Look, I got to tell you, I am so with you, Frank. You and I, we are so simpatico. Perhaps it's because we've been with each other maybe 25 years. I think your question and answer on Uber is yes, it goes higher. And I got to tell you, I think that those who doubt it, All right, next week could be a quiet one, but, we're going to have to keep an eye on what the White House says before we assess what's going on, particularly with China, obviously. On Mad Money tonight, is the travel bull market still with us? I'm digging into last night's results from Vail Resorts that sent the stock lower today on an up day. Then you called in and you stumped me on an under-the-radar aerospace and defense stock. I'll reveal the name and I'll show you why I am very much intrigued by the story. And we're playing Am I Diversified to see if portfolios of Cramerica are ready to handle whatever the market throws at them. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.